On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners financial advice provider disclosure statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Morning team, hope everyone's well. Let's talk about what we saw across markets last week, then let's turn our attention to the week ahead. Equity markets did take a bit of a breather. There were a few things that just dented the optimism. We saw President Trump try and fire Federal Reserve Governor Lisa Cook. We had a slightly more uncertain outlook commentary from Nvidia. It was a good result, but there were a few elements of caution in that commentary, particularly around the Chinese business. And we also had some news late in the week that most of President Trump's tariffs have been ruled illegal by a federal appeals court, and it found that he exceeded his authority by using the International Emergency Economic Powers Act to essentially sidestep Congress and impose those tariffs. So that ruling doesn't take effect until mid-October, so there is a high likelihood that the US administration, the Trump administration, will ask the Supreme Court to reverse that decision. So the tariffs will stay in place now for the time being, but that situation has become slightly more complicated. So in terms of market movements, the S&P 500 index in the US slipped back 0.1%. UK and European shares were down 1.4% and 2% respectively. Japan was off 0.8%. Emerging market equities 0.6% lower. The Aussie market did manage to eke out a very marginal gain, and the local NZX 50 ended the week down almost 1%. We were dragged lower by EBOS Group, which fell about 18%, I think, after a disappointing earnings release. However, August, which is now behind us, was a positive month for all of the major markets, including New Zealand, and most markets around the world, not including New Zealand, are still tracking very well on a year-to-date basis. Most of them, apart from us, are higher in 2025. We're still down 1.4%, but most of those other major markets are in positive territory. Emerging market equity, in fact, all of them are in positive territory. We are the only one that is not. Emerging market equities have been the strongest performer this year. They're up 17% so far in 2025, and we've actually seen emerging markets rise for 8 consecutive months. So every month this year has been positive for equity markets. You've got to go back to December last year to find a down month, and that is the longest winning streak that we've seen since 2017. So EM has been the place to be. Interest rates did continue to trend lower. The US 10-year Treasury yield was down slightly, finished at 4.2%, and here in New Zealand, the 5-year swap rate ended the week 5 basis points lower at 3.3%. Looking back at some of the key releases, we had PCE inflation in the US for July. That stands for Personal Consumption Expenditures. This is the Federal Reserve's preferred inflation measure. It was pretty much in line with market expectations. The headline and the core PCE were up 0.2% and 0.3% respectively for the month, and at an annual level, headline PCE inflation was steady at 2.6%, and core PCE inflation accelerated to 2.9%. So that was the highest since February for core PCE inflation, although it was in line with market expectations. Markets still see an almost 90% chance of a Federal Reserve rate cut later this month. We're in September now, remember, and in total there are 56 basis points of easing priced in between now and the end of the year. So essentially 2 cuts, one in September later this month, and then one more before the end of the year. Here in New Zealand, the highlight was business confidence. We got the August ANZ Business Outlook survey. Headline confidence edged a little bit higher. It's sitting at 49.7. That's the highest in 5 months. Own activity slipped back a little bit, while past activity eased further, and it was actually negative for retail, construction, and manufacturing. When you look at ANZ's sector heat map, it showed that agriculture was slipping a little, but remaining at very high levels. Obviously, commodity prices have been quite strong, and the dairy sector is performing very well. The other one that stood out for me was construction, which continues to deteriorate, even though it's already at pretty subdued levels. There were signs of improvement across retail and services, while inflation indicators also fell, and the net percent of firms expecting to raise prices in the next 3 months was down slightly at just under 43%. Right, turning to the week ahead, and it will be a holiday shortened week in the US. Markets will be closed on Monday for Labor Day. However, the US economy will be in focus. We'll have the August jobs report, we'll have the latest ISM indices, and we'll have the Federal Reserve's Beige Book all due for release. We'll start with the ISM indices, and we'll get the manufacturing ISM out on Tuesday, overnight on Tuesday. It's often out on a Monday, but because of the holiday, it's out a day later, and then we will get the services ISM on Thursday. Now, a month ago in July, these were all weaker than expected. We had the manufacturing ISM, which fell to a 9-month low, and it was well below forecasts. You also saw disappointing new orders. The only bright spot was an unexpected fall in the prices paid index, which is an inflation indicator, and the services ISM was also pretty weak in July. It came in at 50.1, which is only barely in expansionary territory. It still points to a stalling services sector. So for August, we'll be hopeful that we do see some pickup. Then we'll get the jobs report. That is out on Friday, so it'll be Saturday morning in New Zealand. Now, this will be really important. This will be really important ahead of that Federal Reserve meeting, because like the ISM indices, the July jobs report was also very soft. We saw just 73,000 new jobs created compared to forecasts for 104,000, and the previous 2 months were revised sharply lower. So in the 3 months ended July, we saw just 106,000 new jobs added, which is the weakest since COVID. And if you exclude that oddball artificial COVID lockdown period, that's the weakest since 2010. So we'll be watching these August figures when they're out on Friday or Saturday morning New Zealand time. Markets expect another fairly soft result, 75,000 new jobs to be created, and the headline unemployment rate in the US is expected to tick up a little bit. It's currently sitting at 4.2. Markets see it rising to 4.3%. So I guess this is an interesting one, because if it comes in much, much stronger than expectations, which is unlikely, but let's say it did, that could cause people to question whether you'll get that Federal Reserve rate cut. So it'll be a case of, good news is bad news from a market's perspective, although in an oddball sort of way, if it comes in on the soft side, that will really firm up hopes and expectations that the Fed will resume its easing cycle and cut rates in September. So bad news might be good news. So take your pick how you want to view that one. But it is a big week in the US, 4-day week for markets, because Monday's a holiday, but quite a bit going on in terms of economic releases. Elsewhere, we'll get inflation in Europe, we'll get wages in Japan, we'll get PMIs in China. On the corporate earnings front internationally, things have quietened down quite a bit, but there's still a few things to watch this week. We've got Salesforce, Broadcom, and Lululemon that are all set to announce quarterly results. Here in New Zealand, there's a few things to watch. We will have the results of the latest global dairy trade auction early on Wednesday morning. Now, a fortnight ago, prices slipped back marginally. That was the first decline in 6 weeks. However, we did have some good news last month, because Fonterra announced a slight increase in the payout for the last season, 2024-2025. They bumped it up to $10.15. It was $10 flat before. That's the highest of all time. And for the current season, Fonterra tightened its forecast range to $9 to $11. Before, it was $8 to $11. So they've still got a midpoint forecast of $10, but they've narrowed that range by lifting the bottom of that range. So that does point to a bit more confidence in how things are tracking. Outside of that dairy auction, we'll get building permits, we'll get the terms of trade, and we'll get building work for the second quarter. While across the Tasman, there's actually a bit going on. June quarter GDP will probably be the highlight. That is out on Wednesday, I think 1:30 p.m. New Zealand time. And Reserve Bank of Australia Governor Michelle Bullock will speak from an event in Perth that evening, I think 6 o'clock Sydney time, which is at 4 o'clock New Zealand time, or is it 8 o'clock New Zealand time? 8 o'clock, isn't it? I always go the wrong way in terms of that 2-hour time difference. Right, that is how the week is shaping up. Not a lot happening on the corporate front in New Zealand or Australia, but we've had a very, very busy period through August, so we'll give the analysts a rest, let them have a few days of breathing room after such a busy period. Thanks for listening, team. We'll talk again soon. I hope that was useful. Enjoy your week.
For more insights, visit craigsip.com.